Welcome to Explain the Charts, where we break down the market data and news to help you make informed trading decisions. Today, we're taking a deep dive into the USDJPY, a pair that's been making headlines due to the US presidential election. We'll be analyzing the latest news and events to see their impact on the chart data. Then, we'll go through each chart and provide insights into key price levels, trends, and possible reversals. Let's jump in. The recent Google search results reveal that the USDJPY has been relatively flatlined near 152.00 as traders are uncertain about the U.S. presidential election outcome. The Fed is expected to cut interest rates by 25 bps, which could potentially weaken the U.S. dollar and put pressure on the USDJPY. However, the market is also watching the U.S. Treasury yields, which remain steady despite the Fed's stance. The FOMC's outlook on monetary policy remains uncertain, with Fed officials suggesting a 4.4% federal funds rate by the end of the year. If the FOMC delivers a hawkish rate cut, the recent weakness in the USDJPY could be short-lived. The October high, 153.88, is a significant price level to keep an eye on, as it could act as resistance in the short term. The article also mentions the possibility of the USDJPY trading to fresh weekly lows ahead of the Fed meeting. We'll investigate these key price levels and their potential implications when we look at the charts. Looking at the daily chart of the USDJPY, we can see a clear upward trend since the September lows. The pair has surged over 10% since then, indicating strong bullish momentum. However, it seems to have stalled into technical resistance ahead of the U.S. elections and the FOMC interest rate decision. This suggests a potential inflection point where the price action could shift direction. The technical outlook suggests the USDJPY is trading within a descending pitchfork, which is a chart pattern that often indicates a pause or consolidation period. A break below the 200-day moving average, around 151.60, would threaten a larger correction, while a close above 153.40 would mark uptrend resumption. The November range highs are defined by the 153.02/40 technical zone, which is a region defined by the May low day close, LDC, and the 61.8% retracement of the yearly range. This zone has been acting as resistance in recent days, and it will be crucial to see how the price action develops around this level. Overall, the daily chart paints a picture of a pair that is poised for a potential reversal, but the outcome is still uncertain. Let's look at the hourly chart to get a closer view of the recent price action. The hourly chart shows a more detailed picture of the recent price action. We can see that the USDJPY has been consolidating around the 152.00 level for the past few hours. The price action has been relatively range-bound, with no clear breakout in either direction. This consolidation suggests a lack of clear direction in the market, which is likely a result of the uncertainty surrounding the U.S. election and the Fed's rate decision. However, we can observe some potential support levels near 151.50 and 151.00, and resistance levels around 152.50 and 153.00. If the price breaks above the 152.50 resistance level, it could signal a continuation of the upward trend. Conversely, a break below the 151.00 support level could signal a correction or a move lower. Let's zoom in on the 15-minute chart to get an even closer look at the recent price action. On the 15-minute chart, we can see the USDJPY has been experiencing some volatility. The pair has been moving up and down in a relatively tight range, with no clear direction in the short term. It appears to be trading within a range between 152.00 and 152.50, with the recent price action indicating a potential pullback from the upper end of this range. The recent news and events suggest that the market is waiting for a clear signal from the FOMC and the new U.S. administration before making a significant move. We can see that the price has been bouncing off the 152.00 support level in recent candles. This suggests that the 152.00 level could be a key level to watch in the short term. If the price breaks below the 152.00 support level, it could signal a further correction or a move lower. However, if the price rallies back above the 152.50 resistance level, it could signal a continuation of the upward trend. We'll need to keep a close eye on the price action in the coming hours to see which direction the USDJPY will take. In summary, the USDJPY has been in a state of flux following the U.S. presidential election. The market is awaiting clarity from the FOMC and the new U.S. administration before making a definitive move. Key price levels to watch include the 153.88 October high, the 153.02/40 technical zone, the 152.50 resistance level, the 152.00 support level, and the 151.00 support level. A break above the 152.50 resistance level could signal a continuation of the upward trend, while a break below the 152.00 support level could indicate a correction or a move lower. The 200-day moving average, around 151.60, is another important level to monitor, as it could act as support or resistance depending on the price action. Overall, the USDJPY remains uncertain, and it will be crucial to watch the price action and news flow closely in the coming days.